Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. This week's screen is a relative price strength screen, good for all markets. Particularly appropriate now because nobody really knows where this market is headed at the moment, unfortunately. Kevin Matras, head of our Research Wizard division, joins me once again to put this all into perspective for us. Right. But that's, we joke, but that's true. It is appropriate because the market does not have a clear-cut direction at the moment.
Yeah, it's going back and forth. It pulled back last week. Now it's up today. So yeah, everybody's trying to figure out which direction this market is ultimately going to decide on. But yeah, over the last few weeks, I really have been trying to find stocks that have been going up or at the very least doing better than the market. And I've talked about this kind of stuff before, but think about it. If somebody asked you what your best stocks were, those would be the ones going up, and your worst stocks, of course, would be the ones going down. That's what we're going to be talking about today, the stocks that are going up and beating the market.
All right, so the whole concept being stocks that are moving higher have a tendency to keep following that path?
Right. Statistics have shown that stocks making new highs have a tendency of making newer highs. Now, I am not necessarily looking for stocks that are breaking out to the upside, making new 52-week highs. But again, there is a lot to be said for stocks that are bucking the downtrend and that are outperforming the market. And what we are doing today is, we're trying to find the stocks that are doing just that, preferably on good volume. Now, again, if they are moving higher, especially during times of difficulty, usually that means they're moving higher for a reason. If there really wasn't a reason, they probably wouldn't be moving higher at all. Now, of course, you can't only focus on the percentage price change. You still have to kind of, look at the fundamentals because those are ultimately, one of the deciding things on which way the market's going to go. But by looking at these price movements, oftentimes if you're looking at just a fundamental screen, you may find stocks that just barely miss your fundamental criteria. But by putting these different stocks onto your radar screen, stocks that are performing good based on their percentage price change, those are the kinds of stocks that you probably need the most during times like these.
So what's the importance of the term then relative price strength?
Well, relative is important because, when the market is going down, if you're only looking for absolute price changes, oftentimes your screen may produce nothing. Because again, what we're really trying to do is find stocks that are beating the market. But if the market is collapsing, really all you're going to be finding is stocks that are not going down as much. But again, the reason why it's so important to focus on the relative percentage price change is because if you're only focusing on the absolute price change, you may come up with zero. And again, too, the reason why relative is so important even in up markets is because you want to make sure you're finding the outperformers and the pace setters. A lot of stocks, a lot of junky stocks will go up even when the market is going up because of this rising tide raises all ships. So you want to make sure that you're finding the ones that are going down less than the market when the market is getting hit and the ones that are going up more than the market when the market is strong.
All right, let's get right to those parameters.
Okay, this screen starts off by looking at companies with a relative percentage price change over the last 12 weeks to be greater than zero. We also want it to be, for the last 4 weeks, we want the relative percentage price change to be greater than zero. And for the last week, we want the relative percentage price change to be greater than zero. So we want stocks that are outperforming the market on all different time periods. A longer-term time frame, a medium-term time frame, and a shorter-term time frame.
Okay.
Also, we want the projected growth rate for these stocks to be better than the average projected growth rate for the S&P. So not only do they have to be outperforming the S&P in price responsiveness, they also have to have a projected growth rate better than the S&P to make sure these gains can be considered potentially long-lasting. Also, too, we are looking at companies that only have a Zacks rank of a 1, so just the strong buys are getting through. These are applied to companies with a current price that are greater than $5, as well as an average 20-day volume of 100,000 shares or more, so they're tradable.
All right, and how many have come through this week?
There was about, I think there was about maybe 40 or 45 stocks that came through. Here's 5 of them. You've got AmeriCredit, Cabot Corp, MKS Instruments, Seagate Technology, and Universal Technical Institute. What's interesting is all these companies have a Zacks rank of a 1, of course. They all have growth rates better than the market, and all of them are responding very nicely, even during this difficult market condition.
Do you own any?
I don't have any of those.
All righty, get on over to Zacks.com's homepage, link to the text version of this week's Screen of the Week by clicking on the link right next to Kevin's picture, smiling face that he's got there. And if you want to know more about the Research Wizard, which is the tool that Kevin uses to achieve all these screens, Zacks.com/Research Wizard is where you need to go on the World Wide Web. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.